Ever seen a stock that's just been kind of sleeping and then bam, it just explodes out of nowhere? Well, that's exactly what we're looking at today. We're going to break down the anatomy of a breakout using MidWestOne Financial Group as our case study. It's a fascinating look at this constant battle in the market, right? The incredible power of momentum versus the very real danger of risk.
Get this. In one single day, this stock shot up nearly 40%. I mean, think about that for a second. That's the kind of gain you hope to see over a few years, not in a few hours. A move that big, that fast, well, it forces everyone to stop and ask one very simple question. Yeah, what on earth just happened here? Was this just some random fluke, a one-off event, or were there signals hiding in plain sight that this was coming? Let's dig into the data and see what we can find out.
You know how they always say it's the quiet before the storm? Well, that is totally true in this case. To really understand this explosion, we have to look at how incredibly quiet things were right before it all went down.
Okay, so the contrast here is pretty wild. For 3 whole months, July, August, September, right into October, MidWestOne was basically flat, just quietly trading back and forth in this tiny little $3 range. Pretty boring stuff. Then, on October 24th, bam, it's a rocket launch from about $28 to over $39. This wasn't some gradual climb, it was a straight-up blast-off.
The price tells us what happened, but the volume tells us why. Don't get lost in all these numbers, just focus on the daily volume. On a totally normal day, you might see, I don't know, maybe 90,000 shares traded. But on the day of the breakout, that number just skyrocketed to over 1.6 million. That's not just a little bit of interest, folks. That's a tidal wave of money and conviction pouring into one stock.
All right, a move this powerful doesn't just happen in a vacuum. The charts were definitely sending signals, so let's put on our detective hats for a minute and build the bullish case, piece by piece.
So, what were the signs that pointed to this not being a fluke, that this was a real, fundamental shift in momentum?
This chart might look a little complicated, but the story it tells is actually really simple. Just think of those lines, the moving averages, as the stock's typical cruising altitude, its center of gravity. Well, on the 24th, the price didn't just climb above them. It literally jumped or gapped over all of them at once. That's the market's way of grabbing a megaphone and screaming, hey, that old quiet trend is over and a powerful new one has just begun.
And it wasn't just one signal. It was like a whole chorus of indicators singing the exact same song. The momentum signals are positive, the trend strength is just dominating, and the quality of this breakout gets an incredibly high rating. When you see an overall technical score of over 85, it's basically saying that from a technical point of view, everything is firing on all cylinders.
But, you know there's always a but, right? Every powerful story has a counter-narrative. After a move this big and this fast, you absolutely have to start looking for the signs of exhaustion.
So the big question becomes, has this rocket ship flown a little too close to the sun? Because when you dig in, the data is definitely flashing a few pretty serious warning signs.
And this phrase right here, taken straight from the analysis, this is the heart of the whole bearish case. The technicals are overwhelmingly positive, yes, but at the same time, they're flashing these bright red warning lights. And here's the proof. Take a look. All these key indicators are screaming the same thing. The RSI, which tracks momentum, it's in the red. The CCI, which looks at trend strength, is flagged as extremely overbought. Even the MFI, which follows where the money is going, is flashing a warning. You can think of these like the temperature gauges on your car's engine, and right now they are all deep in the red zone.
So what does overbought actually mean in plain English? Well, this analogy sums it up perfectly. Imagine a sprinter who just shattered a world record. The performance was incredible, absolutely historic. But what happens right after? They're exhausted. They have to rest, they have to recover before they can even think about running that fast again. That's the stock. It might need to pull back and just catch its breath before it has the energy for its next big move.
So here we are. It's like the classic unstoppable force meeting an immovable object. You've got this incredibly powerful momentum clashing head-on with these serious overbought warnings. So where do we go from here? Well, based on all the analysis, there are really 3 potential paths forward. First, the bullish scenario. The momentum just keeps going and pushes the price even higher. Second, the bearish scenario. Those overbought signals win out and the stock pulls back for a correction. Or third, the neutral path. The stock just kind of trades sideways for a while, consolidating and catching its breath in this new higher price range.
So if there's one thing to take away from all this, it's this.
We're watching a battle play out in real time. On one side, you've got the immense power of this new momentum. And on the other, you've got the gravitational pull of these high-risk, overbought conditions.
And that leaves us with the ultimate question, doesn't it? It's the classic market conflict, momentum versus risk. Which one of these powerful forces is going to win? Well, whatever happens next is sure to give us the answer.